This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices inched higher on Wednesday amid uncertainty over what may happen next in the Middle East conflict, after demand concerns knocked the market to its lowest since early October in the previous session. Brent crude oil futures rose 19 cents, or 0.3%, to $74.44 a barrel by 0630 GMT. U.S. West Texas Intermediate crude futures climbed 24 cents, or 0.3%, to $70.82 per barrel. Oil prices tumbled more than 4% to a near two-week low on Tuesday due to a weaker demand outlook and after a media report said Israel would not strike Iranian nuclear and oil sites, easing fears of a supply disruption.
A resumption of Libyan crude output after a political crisis over the central bank slashed the OPEC members' exports to a four-year low, has led to a surplus in crude supplies in Europe, forcing competing sellers to cut their prices, trading sources and analysts say. Libya's National Oil Corporation, NOC, announced the restart of production on October 3 after a new central bank governor was appointed. As of October 13, output had reached about 1.3 million barrels per day, close to pre-crisis levels. The timing of Libya's ramp-up is coinciding with maintenance at European refiners, with several plants in the Mediterranean and northwest Europe in full or partial shutdown. This is weakening the price of competing crude grades, traders and analysts said.
Moving on to the top news in the energy sector.
The world is on the brink of a new age of electricity, with fossil fuel demand set to peak by the end of the decade, meaning surplus oil and gas supplies could drive investment into green energy, the International Energy Agency said on Wednesday. But it also flagged a high level of uncertainty as conflicts embroil the oil and gas producing Middle East and Russia, and as countries representing half of global energy demand have elections in 2024. In the second half of this decade, the prospect of more ample, or even surplus, supplies of oil and natural gas, depending on how geopolitical tensions evolve, would move us into a very different energy world, IEA Executive Director Fatih Birol said in a release alongside its annual report.
EU energy ministers met in Luxembourg on Tuesday to discuss the bloc's rising Russian LNG imports, Ukraine's energy shortages ahead of winter, and how to balance energy prices across member states, officials said. The EU agreed a 14th package of sanctions in June, including a ban on transshipments of Russian gas as of March next year, but stopped short of an outright ban. Since then, Belgium and the Netherlands have seen a sharp increase in imports. In a letter on Monday, France and 9 other countries asked the European Commission to propose stricter reporting obligations on Russian liquefied natural gas for storage companies and suppliers. Next, we have the top news in metal markets. Iron ore futures prices fell on Wednesday, as prospects of firmer global supply and softer Chinese demand overshadowed stronger trade data from the top consumer. The most traded January iron ore contract on China's Dalian Commodity Exchange ended daytime trade 1.88% lower at 782 yuan and 50 fen, $109.92, a metric ton. The benchmark November iron ore on the Singapore Exchange was 1.09% lower at $104.80 a ton, as of 07:05 GMT. Brazilian miner Vale reported on Tuesday a 5.5% increase in its third-quarter iron ore production compared to a year earlier, reaching the highest level in almost 6 years.
Gold traded in a tight range on Wednesday as market participants awaited more U.S. economic data to determine the number of rate cuts the Federal Reserve is likely to deliver in the near term. Spot gold rose 0.2% to $2,667.01 per ounce by 0511 GMT and was $18 shy of a record high hit last month. U.S. gold futures gained 0.2% to $2,683.50. The game changer in gold prices is the U.S. monetary policy easing as it sets the stage for investment demand, said ANZ commodity strategist Sonny Kamari.
We will now look at the top news in the agricultural sector.
High demand from Asian importers and a limited supply of grain on world markets has pushed Ukrainian domestic and export wheat prices up, producers said on Wednesday. Ukraine is a major global wheat grower and exporter, but the government has limited its wheat exports in the growing season from July 2024 to June 2025 amid high demand from exporters. Against the backdrop of climatic problems and lower yields in the European Union, Ukrainian wheat is becoming more competitive, especially for Asian countries, Ukrainian leading farm producers union UAC said in a statement.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.